And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, turning intent into execution. That's how ABSA are invested in Africa's energy future. 9 minutes after 6. Good evening. Welcome to the program. I'm Stephen Grootes. One of those days where you sort of look around, get a moment to get your head above the parapet a little bit, take a breath, and wonder how on earth are they going to fix the Public Investment Corporation. It's been such a big talking point over the last few days. So much money is involved. So many things seem to go wrong again and again and again. And I was given the understanding, certainly late last week, that there'll be a sort of meeting today of what's left of the board. I think perhaps only on Wednesday we might get the first hints of who will be on the board. Cabinet will meet then, but I think the formal announcements will be probably on Thursday. I have to say, one of the interesting things about the National Coalition, to say what you like about all of the parties, as far as I know, none of them have leaked anything about a cabinet meeting. It just hasn't happened, and you'd think, considering how they compete against each other, that maybe they would. So, yeah, I find that very interesting, actually, that hasn't happened. But I do wonder, lots of speculation over the weekend as to who the new chair will be. The Sunday Times reporting, and I mean, impossible to know if this is true. I'm sure it'll come out at some point. And maybe he will confirm one way or another that David Masondo, the former chair who resigned last week, was actually told by the president that he had to resign, and almost threatened. The sort of indication from one of the sources in their story was he was told that if he didn't resign, he would be fired as deputy finance minister. And given the state of relations between Masondo's party, the South African Communist Party, and the ANC, I think maybe the president would be able to do that quite easily, actually. So there's so many different things within it. We'll speak to Songezo Zibi in just a moment, the chair of Parliament's Standing Committee on Public Accounts. I do think it's an important conversation. It looks like the Financial Action Task Force is kind of moving the goalposts more closer together. And that might have some implications for how long we can stay off the grey list. Moving it also to outcomes, rather than sort of what laws you have. Now, outcomes is complicated because in each case, they're completely different. You're dealing with judicial systems, and you can't say, for example, that, you know, in South Africa, because none of the state capture people have really gone to jail, some of them are even in Parliament, I think, that therefore you must be off the Financial Action Task Force. Can you imagine a judge having to reach a decision on acquittal or conviction based on, you know, a Financial Action Task Force? It can't work like that. So I don't know how we do that. We'll speak to Stephen Powell, that'll be of a forensic practice at DNS, about that in a few moments. An interesting series of thoughts today about the issues with councils and the decision by the National Treasury to essentially stop some of the payments to them. Thando Ngozo is the independent economist. You'll hear his view about them in about half an hour. And I'm at a loss to explain what's going on with the DTIC over the delays to the film incentive program. As far as I know, virtually none of those payments have been made. We'll speak to Jack Devnarayan about it. I know the DA is trying to put pressure on them. Good to hear from you this evening. 011 883 0702 021 446 0567.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Trade Intelligence putting out a report showing at the incredible growth in the number of liquor stores around the country. They seem to be growing more quickly than food retail stores at the moment. In fact, twice as fast. And if you look at the competition between sort of Pick and Pay, ShopRite, Checkers, I suppose, I think Boxer as well, and then also, of course, Spar, who perhaps sort of led the way in this a little bit, you can see why in their bottle stores the same thing would happen. Are there any bottle stores that you see and you just think to yourself, actually, that's too much, too many, too cheap? I mean, do you go to any sort of, maybe they're near a school, there are often quite tight regulations around that. But I sometimes wonder, have we just got too much booze around us? I remember when I went to the UK as a much younger person, just after I finished studying, being amazed how 1/4 of the supermarket, fully 1/4, was given over to alcoholic beverages. And they weren't selling spirits, by the way. That was just beer and cider and maybe some wine. But 1/4, I couldn't get over it. It just seemed too much to me. Do you ever get that sense with bottle stores now when you go to a shopping mall? Good to hear your view. And perhaps the shopping mall, that you visit. What do you think of it? 072 702 1702.
7:02.
7:02.
Stephen is on The Money Show.
6 to 8 p.m.
Well, still no indication from the Finance Minister Enoch Godongwana as to who he's going to appoint to the new board of the Public Investment Corporation. The resignations last week of several board members. Thursday night, the chair, David Masondo, resigning. Godongwana was due to meet with the remaining board members today. I don't know if that happened or not. It might have been sort of rendered moot simply because the board can't make a quorum now. News 24 reporting Cabinet will make a final decision on the new board when it meets on Wednesday. Songezo Zibi is the chair of Parliament's Standing Committee on Public Accounts, also the leader of Rise Mzansi. Songezo, good evening. I mean, you've been watching this all play out over the last few weeks. What kind of person do you think we need to be on the board of the Public Investment Corporation?
Good evening, Stephen, and thanks very much for having me on. So I wish we had a different framework from which to oversee the PIC in terms of its governance, because it actually doesn't need a politician as chairperson, and it also does not need some of the designated board members who are stakeholders of the GEPF who sit on the PIC board, because that fundamentally is what is a systemic risk to South Africa in terms of its financial system and many other countries on the continent. In essence, Stephen, in short, that there is no cabinet minister right now with a kind of asset management experience to oversee a 3.8 trillion rand assets under management entity. None whatsoever. Secondly, none of those trade union leaders on the board of the PIC know anything about asset management. Their role should begin and end either within their unions or on the board of trustees of the Government Employees Pension Fund. That they are on the PIC board is in itself a problem. And finally, the reason you can't have a deputy minister on there is that they have conflicting interests inherently because they've got fiscal issues to solve. The temptation is to always instruct the PIC to do something such as when the government needed a bit of money, the PIC was instructed to buy the government's share in Vodacom in order to realize 23 billion rand for the fiscal. That's not why the PIC is there. It's there to maximize returns for government employees. And so who is the chairperson almost does not matter, in the sense that if it's a deputy minister, they are almost certainly uniquely unqualified for the role.
You could argue that the PIC is the biggest fund like this in Africa. The sheer size of it means then that there's actually no one in South Africa that's qualified. I mean, you couldn't really make that argument stand up. But if you were to then go to the best qualified fund managers, and there have been times when the PIC's had people who've worked in the private sector, it hasn't always worked out then either.
No, but this is about skills, Stephen. I mean, we've got, our banks, for instance, have got balance sheets of over $1 trillion. For instance, all of them, nearly all of them, of the big five, for instance. Experience matters, Stephen. You can't take me and make me coach of Orlando Pirates just because I've got an interest in football. A youth development coach would do better than me. The idea that you can take a politician with no asset management experience whatsoever and make them chair of the biggest asset manager, of any asset management, even a boutique asset management firm in any event, is crazy. As anything that you do for a systemically important institution. So I've got to push back on that, Stephen, but we are where we are. And we will have a uniquely unqualified person, if it's a deputy minister, as chair of the PIC, and we're going to recycle the same problems over and over again.
Are there other structural changes we should make? I mean, to change the composition of the board would require a change to the law, and I imagine the unions would want some kind of representation. I sort of get that. So at some point there probably needs to be at least one member of the board there. But then, do we need to make other changes as well? And one of the problems seems to have been the idea, and this, to my mind, made sense, that instead of one chief investment officer, you would have one for the listed space, one for the unlisted space. And I forget what the third was to do. But that kind of change almost made sense to me. You certainly need a very good person in charge of the unlisted space.
Even that idea is half-baked. So here's the problem with the PIC. It's got a listed portfolio. $1 trillion of that is in government bonds. The rest is in equities. That's kind of easy in inverted commas to deal with. Then there is a private equity business, which is a so-called unlisted portfolio. That's in reality private equity. Then there is a banking business, a lending business, which pretends to also be the private equity business. The PIC does not have a credit committee, Stephen, even though it engages in lending. This is madness. We can't do things like that because the people in the private equity business have an inherent interest in realizing the deals, and therefore the lending decision is made on a completely different basis than what a credit committee would realize. And what do you end up with? You end up with an Acapulco. You end up with investments that are yielding nothing to the tune of 18 billion rand in 1 year. This on its own is a problem. So there's a lot of changes that have got to be made. It's not just to how the PIC itself is structured. It's a composition of the board. And once again, I'm going to push back, Stephen. The GEPF is a client of the PIC. There is nowhere in the world on planet Earth where a client has got people on the board of the company that it has hired to do its investment for it. It only happens in South Africa. The legislation must say what skills are required of any person who must serve on the board of the PIC. It doesn't. And that's part of the problem. So we can't beat around the bush and retain these problems which lead to the crisis that we're facing now.
Songezo Zibi, thank you very much indeed. The Chair of Parliament's Standing Committee on Public Accounts, also the leader of Rise Mzansi. Some sobering thoughts there. 21 minutes after 6.
The Money Show with Stephen Grootes
On 702.
702.
Well, despite the fact we were able to get off the grey list of the Financial Action Task Force last year, some suggestions we might in fact be vulnerable to being put back on this year because the goalposts to stay off the grey list are getting tighter and tighter, or closer and closer together if you prefer. There's also new focus on outcomes rather than just on laws. Stephen Powell is the head of the forensics practice at ENS. Stephen, good evening. How is the Financial Action Task Force, I suppose, changing the rules of the game? What are they doing?
They're not changing the rules. The game has changed. You know, the current FATF process is more demanding because we now have to demonstrate effectiveness. It's not whether we've passed the laws and whether the institutional reforms are actually producing results. We have to show that we've got the right AML, CFT laws on the books, but we've got to see sustained investigations, prosecutions, convictions, as well as asset recovery in serious financial crime matters, Stephen.
How do you prove that? I mean, it's quite easy to say, there are the laws, we've done it, tick. Quite harder to say, these are the outcomes that you wanted and we've done that.
It is a lot harder, and we've got to demonstrate this through getting convictions in criminal courts. We need to put perpetrators behind bars. But I think there are just indications of some positive actions that are taking place. You know, with the Madlanga Commission, we've heard revelations of large-scale corruption and even sabotage of the criminal justice system. But what we saw just in the last couple of days with the asset forfeiture unit forfeiture order that was granted by the court against the Momela syndicate implicated in that Tembisa hospital looting scandal. Those are the types of success stories that we've got to demonstrate to the FATF. And this is phenomenal because we've seen 6 luxury properties, 3 Lamborghinis, a Bentley Continental, and a luxury boat all forfeited to the state. And as long as we can continue to do this, we'll be able to demonstrate a good case to the FATF not to put us back on the grey list.
So, I mean, it gets complicated. You could easily say so many of the people implicated by the Zondo Commission are not actually in prison, haven't been held accountable, even though some of them have been prosecuted and the cases are taking forever. Some are in Parliament, of course. The same might happen with people at the Madlanga Commission too. But real outcomes would actually mean proper accountability. And yet, I can see the argument against it now. And in fact, I think the argument against it would have some merit, which would be to say, you cannot say people have to be convicted to please the Financial Action Task Force.
No, absolutely not. People need to be convicted because we've got to demonstrate to the public at large, apart from the FATF, that the criminal justice system is working, that crime does not pay, that if you're going to commit fraud or get involved in dodgy tenders, we will take away the proceeds of crime and you will go to jail. So we need the convictions to restore confidence in our criminal justice system. But at the same time, we really don't want to get back onto the grey list, and we need to demonstrate that all of these new laws that we introduced post 22, 23, we've introduced beneficial ownership. We've changed the Companies Act, the Non-Profit Organizations Act, the Trust Deeds Act. We've introduced a whole lot of anti-corruption reforms. And it's great. FATF is now saying, well done, South Africa. You now have the laws. Do these laws bite? And that's what we've got to be able to demonstrate. But I think it goes far beyond FATF, Stephen. I think we've got to restore confidence in the criminal justice system. And I am cautiously optimistic that, we've seen some changes in terms of the leadership of that unit. And I am also optimistic that Andy Matibi has done good work at the SIU. And I think he's going to rejig and rejuvenate the NPA in South Africa. I certainly hope so.
Yeah, me too. I mean, there's so much work clearly that still needs to be done there. The way in which the Financial Action Task Forces are basically they're basically making it harder for criminals to access the global financial system. Now, if you get too tight and too many countries are put on the grey list, the thing loses its power. And in fact, if some big countries get put on the grey list, think of, it seems amazing to think of it now, but I suppose it could be possible, the US, it loses its power then too. The Financial Action Task Force needs to be quite careful here. They obviously need to do what they're supposed to do, but you can't put, half the countries on the wrong side of it.
You're quite right. And I think the FATF have to be measured in their response. But there are minimum criteria that every country needs to adhere to. And we've passed a whole spate of new laws, as I mentioned earlier. And, what we've done is we've made sure that the deficiencies that were identified in our 21 review have now been addressed. And now we've just got to demonstrate that these changes, that the legal reforms that have been introduced are actually effective and are producing results. And I must tell you, a lot of businesses have been complaining about the extent of detail they have to do to register companies and providing details of beneficial ownership. It's a lot of extra admin, but it was necessary admin, and I hope it's going to yield results, Stephen.
Stephen Powell, thanks so much, head of the forensic practice at ENS.
The Money Show.
The markets.
Sia Mbata is an investment analyst at the Old Mutual Investment Group. Sia, good evening. Oil, $100 on Friday, around $84 last time I checked. That's a big drop, and all because of this, we hope it's not temporary this time, lack of shots being fired around Iran and the US.
Good evening, Stephen. Most certainly, I think oil has been one of the biggest drivers of market sentiment over the last few weeks, and I think today's moves tell quite an interesting story, actually. So, as you alluded to earlier, Brent crude has fallen quite sharply, and it's trading around $85-$90 mark, depending on which benchmark you're tracking. And this is after $100 oil price last week. And we saw there was geopolitical tensions that had escalated last week. And I think the decline now really follows signs of the de-escalation that we've seen over the last 2 days between the US and Iran. And because of reduced fears, we've seen oil pull back quite a bit. I think what we're seeing is the removal of that geopolitical risk premium. So the last week's rally wasn't necessarily driven by oil demand, but rather reflected investors pricing in the possibility of an oil shock. And of course, all of those fears have eased and the premium has unwound.
Vodacom today, a quarterly update. Their revenue up incredibly strongly, not up very strongly here, although they do seem to be doing slightly better in the prepaid market.
I think This update was quite interesting. Headline numbers were broadly in line with investors' expectations, despite the fact that you do say that, it was quite a strong update. But I think the biggest story for investors, and which is something I'm actually really excited about, is the strategy itself rather than the actual results. So Vodacom has completed its acquisition of a controlling stake in Safaricom, and this is a significant milestone because it actually means that this business is expanding across Africa. So the transaction does materially increase Vodacom's exposure to faster-growing markets and, importantly, mobile financial services through platforms like M-Pesa. And I think the key takeaway is this business is evolving, and rather than being viewed as a mature SA telco business, the investment case for Vodacom is becoming more about Africa, which is exciting.
Indeed. An impact today, a week update from them. They do say that their second half traditionally is better, but certainly the price of packaging not going the way they wanted.
Yeah, certainly. The paper converting and plastics business did show volume growth, though, and improvements in profitability. But as you mentioned, that the margins were a lot weaker in paper manufacturing because of the lower selling prices. But, management have actually pointed to a better second half, as you alluded to earlier, because of the seasonality. And another thing that's coming through in the second half is that they've completed the Kondo mill upgrade. So that should support earnings going forward. And I think, if you look at the outlook, it actually looks a lot more positive, right? So you've got lower debt, you've got improving profitability in the second half. So it actually doesn't seem as bad if you look through the first half noise.
Thanks very much indeed, Sia. Really appreciate it. Sia Mbata is the investment analyst at the Old Mutual Investment Group. Bringing the time to 6:30.
WhatsApp Stephen
on 072
702
1702.
Well, I was reminded today in one of those slightly unfortunate moments how you need to be so careful with who you trust. There's a person called Eunice Abia, who has been a sort of personal finance voice. And in fact, I've spoken to her on the Money Show once, I think. But I've known her off and on, never met her, but, WhatsApp conversations, professional conversations. And I discovered yesterday, News 24 carried the story, that she is actually involved in a case involving, I think it's 86 million rands worth of fraud, when she worked at FNB. It's 131 counts of corruption. Now, she is accused. She hasn't been convicted of anything, so I can't say she's definitely done something wrong. But it was just a reminder to me, because she works in the personal finance space, how careful you need to be when you give people money. Every week, the people at MoneyWeb, and more power to them, are talking about another scam. How many times have you had a phone conversation with someone where you just know this person is scamming me? Or, someone in your life, maybe a parent or an older person, or maybe a younger person. Oh, well, they said they were from this bank, therefore I gave them my PIN number. Disaster. And even people who are very wise in the ways of the world, which is a long way of saying cynical, are sometimes taken in. My worst is the scam where someone actually, you're about to make a big payment and it's all been done on email. And now I'm paranoid about that because someone hacks into your email or makes their email address looks like the person's, gives you the wrong information, and you put it in, and then you really can't get it back. And so that just scares me. Now I'm at a point where I sort of phone the person, or I just don't make it until they phone me. And I say, okay, now we can go through the process. It's just a reminder. So yeah, please be careful with your money. Be careful who you trust with it. 20 minutes to 7.
702.
702
Stephen is on X
at Stephen Grootes.
16 minutes now to 7 the time. Well, we expect the Finance Minister Enoch Godongwana to give a big press conference, I think it's tomorrow, about the issues in councils. He has withheld payments of the equitable share to councils that don't manage their money. I expect he's going to defend that. Lots of people have been very critical of it. And a suggestion from the economist Thando Ngozo that, in fact, this approach is just not going to work. Thando Ngozo is an independent economist, a specialist in fiscal policy, and founder of the IOZA consultancy. Joins us now. Thando, good evening. Thanks for your time. So I have to say, I can kind of understand why the National Treasury is withholding some of the equitable payments. But do you seem to believe there's sort of three big reasons why the councils are getting this all so wrong? They can't manage the money they have. They don't get enough in the first place, and they make bad planning decisions. How could we go about fixing it?
Good evening, Stephen, and good evening to the listeners as well. And thank you for the opportunity to have us on your show. Yeah, Stephen, let me start by saying that what National Treasury is doing is understandable. We do have a problem with most municipalities in the way they manage the money that is allocated to them. There is a serious financial discipline problem within municipalities, which the Treasury is trying to fix. But we think, and the way we understand the problem is that the problem is threefold. The second part to it, as you pointed out in the intro, is that we think that the municipalities might not be getting enough funding in the first place, and that's a funding formula problem. And then also we think that the way that municipalities manage their assets, such as land, also plays a role in the way in which they're supposed to deliver services. Then, so if you diagnose the problem in that manner, then you stand a better chance then of coming up with solutions that then speaks to the diagnosis. So we are saying absolutely what Treasury is doing is in fixing the financial discipline problem is spot on. But we're saying that there is a need to look at the funding formula, basically to recognize the fact that these municipalities are not the same. For instance, then the way that their capabilities of raising their own revenue is not the same. If you have a municipality or a metro that's in the rural area, their ability to raise own revenue will not be the same to a municipality, for instance, that is in the urban area. So if in funding these municipalities, then you have to recognize that fact. And then secondly, also, we know that municipalities rely, for instance, mainly on the revenue that they generate from electricity. And we know that with the shift, from fossils to renewables, we have households that those that can afford it, and those that are being assisted by government to do so. For instance, elected the solar panels, roof solar panels. That then speaks to the revenue, the main revenue stream of municipality that is being eaten away by such advancements. So all of these issues are issues that the funding formula must look at, and then also we can't forget then the way the land asset is being managed, as the constitutional court reminded us in the case of Cape Town, that this also has a bearing on the way that municipalities offer their services. So that's how we think. We think that we must properly diagnose the challenge is in threefold, and then the solution must also speak to that. That's the main point of the analysis.
So sorry to interrupt, but I mean, if I were Enoch Godongwana, I would say, even if I doubled your budgets, you'd still find ways to mismanage it. I mean, look at some of the creativity you get in councils. I mean, don't we need something there for a start? And I've lost count of the number of times the Auditor General has said we need accountability.
Yeah, like we're saying, Stephen, the issue of accountability and the issue of how these municipalities manage their funding is absolutely important. And we're not for a second suggesting that we should continue giving municipalities that are mismanaging funds more funds. That would be like pouring water in a leaking basket. But what we are saying is that you can't look at that in isolation. You must also be in a position to say you've adequately funded these municipalities, and with the adequate funding that they have, they still manage to misuse the funds that is allocated to them. So what becomes important is also to discipline in funding, yes, but also funding, ensuring that you fund these municipalities well, and you recognize that they are not the same. So the way in which you fund them cannot be the same. The issue of accountability and then misuse of resources then is well anchored if you have that, because you are able to say to point to the fact that they are adequately funded and they continue to misuse the funds, and also therefore, and also like we are saying that the issue of how they manage their assets also becomes important. It's an issue that also must be looked at, so that you have a holistic resolution to the problem that you are facing.
I mean, I sometimes think, Thando, we're at a point with so many councils that actually we need to do something drastic. I just can't even tell you what the drastic thing would be.
We might be tempted to think that these are very, very big problems, but fundamentally they are problems that have solutions in the very little things that we do. For instance, if you look at how the committees that are responsible for ensuring that there is accountabilities in the councils, what kind of people we place there, and what kind of expertise they come with in those committees, it then you begin to realize that the problem is actually a very fundamental and a basic one. Put the right people so that they are able to exercise to encourage accountability, and also to make sure that municipalities are using the money that is allocated them in the manner that they're supposed to be using it. So a basic thing like that will go a long way in resolving the problem. Just putting the right people that will exercise oversight on these municipalities. And of course, what matters also is in the councils themselves, the people that are there, the expertise that they bring. Is it the expertise that's required to look after these huge budgets? Some of these budgets are huge, Stephen. For instance, if you look at the budgets of the metros, they run into billions. So you need then the expertise that will match the kind of the kind of skill that is required to specifically look at these budgets and see if they are used in the proper way. So I think that's I'm trying to say, you start from the basic, and then even before you think of the bigger things, you just fix the basics. Once you fix the basics, you may find that you have a lesser problem than you thought you had.
Good advice for everything, really. Thando Ngozo, thank you. Independent economist, a fiscal policy specialist, and founder of Ioza Consulting.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, turning intent into execution. That's how ABSA are invested in Africa's energy future.
5 minutes to 7, the DA calling on Parliament to summon the DTIC Minister Park Star and his officials to explain why the film incentive program seems to not be approving proposals by filmmakers to shoot their projects here. The industry says the delayed rebate program is undermining our competitiveness in the global filming industry. Jack Devnerin is the chair of the SA Guild of Actors. Jack, good evening. I mean, there was a time when you could hardly watch a movie without seeing a shot of Cape Town in it. This program was supposed to make sure that continued. What's gone so badly wrong?
So much is attached to the work of the DTIC and the provisions allocated under the film incentive rebate, Stephen. And it's a pivotal form of institutional support and financing for the independent filmmaking sector. And yes, you would see shots of Cape Town and the Drakensberg and Durban's beaches and, the Karoo. And without these things, you will simply find filmmakers diverting their investments to other parts of Africa, to other parts of the world. And it's to us as creatives, It is an institutional failure that is completely unforgivable, inexplicable, and needs to be addressed with some degree of seriousness by the DTIC, which we do not see to any degree.
What seems to be the problem? I mean, is there any explanation for why the DTIC is not doing what it's supposed to do? I mean, the money hasn't been spent somewhere else, has it?
One can only speculate, Stephen, but as things stand, the coalition that represents the entire filmmaking value chain, including producers, actors, directors, technical crew, the coalition has had 5 meetings over the last 6 months with the DTIC. So far, they've only managed to meet with the deputy minister once, and all the rest have been talk shops where nothing has been achieved. And I suppose if there was any meaningful conversation, we might understand better what the actual logjam is. All we know is that the adjudication committee that is supposed to process all these applications for the rebate has not sat in over 2.5 years. Now, that is entirely a function and falls within the mandate of the DTIC. It seems that they really don't have an interest in explaining to industry itself what the problem is.
Well, I'm sorry, Minister Tar, but if a committee's not meeting for 2 years, isn't that just rank incompetence? I mean, this is having a huge impact on you at the worst possible time.
It sends a message, Stephen, that South Africa is not ready to be a serious participant in the filmmaking process and in the industry globally. Beyond that, there's the more immediate concern that operationally there are film productions that are being hamstrung by the lack of financing and, more importantly, by the lack of confidence for other investors who might otherwise want to step in to assist. We have a lot to lose as an industry, and the DTIC is showcasing exactly why we are not an investable country.
Sure. There seems to be nothing from the DTIC, and we'll try and speak to them tomorrow. You've made as much noise as you can. There were your people in your industry at a protest outside the building, I remember. Has any of that done anything? Has anyone responded? Do you get any, responses to what I presume are your letters and emails and all the rest?
The mobilization of the industry did result in the initiation of the meetings. But typically, when you do meet with government or you meet with parliament, a lot of these meetings go around in circles. We have identified where the logjam is or where the gatekeeping is, but we're not quite sure whether the DTIC has any interest in taking our recommendations seriously. They would claim, and I'm sure the minister would say this, the DTIC operations is to be managed by the DTIC, and then they're not going to take any kind of outside direction on how to manage their own affairs. But from industry side, we are seriously alarmed. There are very dark and grave consequences to the film production industry if the department fails to listen to what it is that we need.
Jack Devnarayan, thanks so much. Really appreciate it. Chair of the SA Guild of Actors. You're with The Money Show at 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporates and Investment Banking, turning intent into execution. That's how ABSA are invested in Africa's energy future. Good evening. Plenty to come in the next little while. We'll speak to Andrea Slubber, the Insights Leader, Trade Intelligence. If you see a bottle store going up wherever you go, it's not you, it's actually happening. I do worry a little bit about our society. I get there's a sort of price war going on. There's a sort of fight over footprint and a fight over market with some of the big retailers, and they've really got into that space quite aggressively. Probably means quite a few things for the sort of older kind of family bottle stores, if I can call them such a thing. But I just worry there's too much booze that's too cheap in too many places too easily. That worries me a little bit. On the other hand, I don't know how you regulate it. I mean, we've tried and failed kind of in the past. You'll speak to Nkululeko Khumalo, the author of the book Drift Happens. Such a great idea for a book. It's about why companies fail to sort of stay on mission if you like. And you can think of so many examples. I mean, you really can. Think, for example, of Pick and Pay, dominant for so long. Then what happened? And so many big companies seem to go through this. I mean, it happens all the time. So I think this is going to be a really interesting conversation. And then don't forget How I Make My Money, Turning Enterprise into Economic Impact. Taryn Hunter-Sharma is the co-founder and managing director at Faith and Fear, Entrepreneur of the Year as well at the Women of Stature Awards. But talking about running a communications agency, some of the problems getting going, finding that first client, how you do it. I think that's going to be a really interesting conversation. Good to hear from you. 011 883 0702 021 446 0567 and voice notes, of course, on 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, you'll have heard me make the point that if you bump into someone at Eskom and you meet them for the first time, you should give them a jolly good handshake for the way things have changed there over the last couple of years. And news late on Friday, and I missed it when it came out, and I regret that their energy availability factor is higher now than at any time since 2017. I mean, that's incredible. That's 9 years. And I mean, I suppose what really happened was the maintenance, the way they've changed their operations, obviously Madupi and Kusile and all the rest, but still, it's a really important factor, and it shows you that the power stations that are running are doing a much better job at it. And I'm hoping we'll be able to speak to Eskom tomorrow, in fact, and get a little bit more on how they've done it, what still needs to happen to get them to where they're feeling a bit more comfortable. But the progress there has been just astonishing. And the reason why this is so important and why we need to think of Mteto Nyati and Dan Marakane and all the people there is because it shows us that big problems can be fixed. We were talking about municipalities a little earlier, and I thought that, in fact, the economist we spoke to, Thando Ngozo, made an important point, that you sometimes just need to start with basics. If you've got big problems, and then the problem gets easier. You fix some of the small things, things get better. And that's sort of kind of what happened at Eskom. Fix the maintenance and things will change. So I think there's an important lesson there that we mustn't forget. And we must realize that big problems, so the NPA, IDAC, everything at the Madlanga Commission, the criminal justice system can be fixed. Just work out what needs to be done and do it. That's what happened at Eskom. I realize Eskom's technical fixes. No reason why we can't fix political problems. I mean, if we can't fix political problems, who do we blame? People who aren't politicians? Now, that wouldn't make sense, would it? 12 minutes after 7.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
If you've gone to virtually any shopping mall in the last couple of years, you've probably seen a brand new bottle store there. Most of the newer ones are part of the bigger chains. Trade Intelligence says corporate liquor stores, so think of the ones owned by Pick and Pay or ShopRite or Spar, are growing their footprints at twice the rate of grocery stores. I suppose, to put it another way, we're getting bottle stores growing twice as quickly as shops that sell food. Andrea Slubbers, the Insights lead at Trade Intelligence. Andrea, good evening. There's obviously a huge rush for customers here. You can see it in the specials. You can see it in the liquor pricing. How is this market changing?
Look, I mean, the competition is so fierce, and like you say, it's visible to all of us, at the rate of us seeing new bottle stores opening, but also when we look at adverts and the special deals across the liquor stores, clearly they're all in fierce competition for our foot traffic and our wallets. So at this point in time, my opinion is that the winners are the consumers, because certainly the deals are just incredibly competitive. But one wonders, when will the saturation point be reached? Hey? I mean, the fact that the store openings of liquor stores are exceeding the grocery stores may sound a bit odd also. Remember also that it's coming off a smaller base, but certainly all the grocery retail groups are in fierce competition because there's a higher margin opportunity in selling liquor than selling food.
I noticed that most of the bottle stores are next to the main retailer. I mean, that's part of the model, right? You want them to be next to each other.
Absolutely. I mean, Boxer, when they presented their results earlier this year, clearly stated the huge benefit of the adjacent liquor stores opening. You looking at great cost efficiencies in terms of the management of that store. And obviously also, like I said, the margin benefit of liquor versus food. And if you look at, like I said, Boxer's intentions over the next year or two, last year and this coming year, they're opening more new liquor stores than grocery stores, or their superstores, if you could call it that. And I mean, all the retailers are really in fierce competition to get our foot traffic into their stores.
People are changing the way they shop. And you don't really plan a big monthly shop anymore. Is it the same with booze? You decide you want a six-pack, you order it, or you go and buy it. You don't sort of buy the month.
There are two considerations. One is the availability of quick commerce, convenience. So that certainly impacted people's buying behavior. But you also have to understand that there's a huge amount of households that live below the breadline, and affordability is also driving what we might view as convenience shopping, where people buy single units, because if you earn a daily wage or a weekly wage, after sorting out the household's sort of food supply, you're really left with very little. So that drives also the fragmentation of buying behaviors, I suppose.
Is it possible, Andrea, to know if the volume of alcohol that's being sold is actually increasing? I mean, price, I think, does matter. And certainly there's a lot of kind of social impact research, a lot of research into alcohol pricing in other markets that show it does matter. Do we know if it's mattering, if it matters now, if the percentage of, or the volume of alcohol is actually going up because of this really intense competition, A, and B, because there are just bottle stores everywhere?
Certainly the volumes are still increasing, but not at the pace that we saw 2-3 years ago. And the one factor that has changed is disposable income being impacted hugely by gambling. I mean, in 2024, the basic or the sort of total spend in South Africa from South African households on gambling increased by 40%. Last year, it increased by 23%. And although spend on liquor is often protected, you know, people really are committed to find the money to buy their liquor products, even the liquor industry is feeling and seeing the impact of how the spend on gambling is eroding household spending power.
I mean, there seems to be no end to this. At some point, surely there's got to be a diminishing return to the amount of investment we're seeing in the total number of bottle stores.
Yes and no. I mean, if you look at, we spoke about the corporate retailers, you know, like the well-known ShopRite Group, Pick n Pay, Boxer, etc., Spar, and then being in such competition and opening these new stores. And in some regions, there's still room for growth. Sometimes what happens is these corporate stores, because they drive such amazing deals, might displace growth from the independent trade. I mean, the independent trade in liquor is huge. You can't only look at the corporate grocery retail footprint, right? But some anecdotal reports and feedback from the trade in our monthly operations meetings tell us that there are some regions where it appears that saturation points are being achieved, you know, with lots of new liquor stores opening in one street where already there are quite a few, where clearly the foot traffic is being diluted. Can we pin down the absolute numbers and analyze that? Not just yet, because, you know, there's also a reduction in foot traffic because of online shopping. But certainly it seems that the saturation point is being approached, at least in some regions. Like I say, we get sort of regional pockets of feedback of saturation like that.
Andrea Slabber, thank you so much. Insights lead at Trade Intelligence.
The Money Show.
Business Books.
20 minutes after 7. Have you ever wondered how a company can do really well, often get quite big, be top of the pops for a while, and then kind of lose their momentum, lose their way. They don't seem to have the same mission. I mean, there's so many examples, some in the supermarket space, some in the computer space, all over the place you'll see them. There's a new book about this. It's called Drift Happens. Wonderful title. Nkululeko Khumalo is the author, and Nkululeko is sitting opposite me now. Nkululeko, good evening. Thanks for coming in.
Oh, thank you. Thank you for inviting me. Huge privilege.
No, of course. We see this so often. So a company starts, it's quite clear in the mission, it makes progress. What seems to go wrong after that?
Yeah, so I argue that in Drift Happens, that in this day and age of AI, you could write up a strategy in an afternoon, with a good afternoon session with AI and using a bit of market data. And so planning is not the issue, it's execution. And 7 out of 10 companies currently that fail in strategy is because of execution. And this drift happens silently in the background and while no one is noticing. And this is what I'm arguing, and this is the major problem.
So is the problem top management? Is it top management appointing the wrong middle managers? Do people keep their eye does their eye come off the ball?
Well, there's actually two human issues that cause drift. And this is what I'm arguing in the book. The one is accumulation without elimination. So we as humans have evolved this trait of when we face a problem, we add to it. So we add new tasks, we add new processes, but we don't stop. And behavioral scientists call this addition bias. And every quarter we keep adding and adding. The other issue is attention scarcity. So we as humans have a memory. We've got working memory of about 7 items, plus minus 2. And a leadership team that's trying to do 14 things is not being ambitious. They're actually going beyond the architecture of human beings. So on one side, we add because that's in our DNA. And on the other side, we don't have the attention to execute on those things. And slowly but surely, we drift from what we planned on doing.
Is part of it that once we have a division or a department, we actually find it very hard to let that go, to just cut it? And this is not so much a comment about the workers there. We just don't like cutting it.
Yes.
It makes us feel smaller.
100%. And it's something I came across recently, and I wish I had it in the book before. The same way that when we do this huge celebration on when you start things, I'm saying that we should do funerals for stopping things as well. And before we decide to add something, let's stop and think about, what is the capacity and clear the field before we start adding new stuff to the attention that our colleagues and the strain that they're under.
It's tempting to say we're not allowed to add a new division without getting rid of something.
Yeah.
Does that work? Because, if you look at some of the big companies that are doing well, and everyone will talk about a Capitec or a ShopRite or something like that, but they have achieved that scale by growing. So you can't really just say, no, we're only going to add a new division if we cut one.
Yeah. So the difference with them is execution focus. They focused on the few things that mattered. And that's one of the first moves that I speak about in the frame. Focus on 3 to 5 things, and everything else you put in other buckets, the not now or the stopped. And that's the key. Drift is, when the movement or the deviation happens without you making a decision. And that's the catch. That's what I'm arguing.
Some companies have been able to grow for a long time by avoiding it. I think the examples you use are Ethiopian Airlines or Dangote Cement. I like those because they're on our continent, and often in quite difficult conditions. So how were they able to have no drift? And I'm sure, certainly with Dangote, there's a strong personality there.
Yeah. No, definitely. And those 2 case studies are referenced in 2 different parts of the book. The Dangote example was with their cement division, and it was with their East Africa expansion.
Yeah.
And what they did was they had one person who was owning that growth, not multiple people. And that's one of the things that I cause, this drift issue. When you have too many heads, a committee, instead of someone that has the ownership end to end. So that's the Dangote example. The other from Ethiopia, and I really love that case study. It's decades and decades of award-winning profitable airlines. And there, I use them in the sustain chapter, talking about the culture and all the elements that make sure that this discipline continues. And the key thing, and the key, golden thread between the two of them is the discipline. So there was fluctuations, there was volatility, but the key thing on both of those cases is that they kept the discipline. And that's, you need to be very stubborn about your core. Yes, you're going to be firefighting here and there, but be stubborn about the vital things, the vital few things that matter.
A company is going to hear this and think, okay, is there a way I want to sort of future-proof, I want to drift-proof, I mean, as you say, drift happens. I want to drift-proof my company for 100 years. Is there a structure I can implement now to do that? Is there a way to do that structurally?
Yeah, so the first thing I would advise them is to just stop. And before you add this discipline that I'm arguing for, is to stop and take things off first before you add something new. And just follow my proposed discipline of Focus 5. And yeah. That should put you in good stead.
So one of the key things is you're running a business, and there's a famous sort of story is that the first person starts the business, and then the second generation kind of manages it, and the third one is poor again. How do you know when drifters come in? And you could argue, when you hire someone for waste reduction that you're in trouble. But how do you know? Are there certain signs that actually drift is coming in now?
Yeah, so I suppose there's multiple signs. There's one where if you look back the past 90 days and you think about, what impact have you made? And it'll be very clear that, whether or not you've added any impact or not. So that's one great example that I like to use. Yeah.
So if nothing's changed.
Correct. Yeah.
I mean, I can just see, that's why those sort of ego-driven managers do so well. Is they it's all about them, so they make something happen.
Yep, 100%. And look, I mean, even if we look at personal examples, look at your gym membership, for example.
Yeah.
And we start off January doing, going every 5 days a week, and then somewhere in April we lose track, and then come July, and we've just stopped. And we didn't make a decision in June to say, I'm stopping going to the gym. It's just something that gradually happened. And that's the issue. And that's what we're trying to fix.
So you would think that management of companies would improve. And as it improves, drift would be less likely. On the other hand, I would argue that managing a company has become a lot more complex. And that means for a CEO or even for a really well-qualified, a good board, it's actually harder to keep your eye on the ball because there's just so many more balls.
100%. And this is why I mentioned in the first move that we stick to 3 to 5 bets. Make sure that attention is focused on the vital few. And it's very, with the age of AI, with, unlimited information, it's very easy to get sidetracked. And so we need to, keep our eye on the ball, so to speak.
In a way, you need to remind yourself of what the mission is.
Correct. 100%.
And that can be quite hard because, people they get sidetracked, they get involved in other projects, they want to do other things.
Yep.
Is that something you need to make sure every worker understands?
Yes. And that's something that I cover in the chapter on Unblock. And what it's speaking to is, and a given example is, if you ask 10 people in the organization, what is the top three priorities that this organization is trying to execute on? And you'll probably get 10 different answers.
Yeah.
And that's drift right there. So it's having that clear communication downstream to say, okay, I'm at the front line. What is this new strategy? What does the 3 top objectives mean for me Monday morning? What do I need to do differently? And having that clarity of mission, to your point. Yeah.
Nkululeko, thank you so much. Really good idea for a book. Drift Happens by Nkululeko Khumalo. And from what I can see of it, really gets to the heart of some of the problems facing companies today. Nkululeko Khumalo, thank you very much indeed. It's a year with the Money Show, just gone 6:30.
The Money Show. How I make my money.
24 minutes now to 8 the time. Well, tonight, how does she make her money? We're talking to Taryn Hunter-Sharman, the managing director and co-founder of Faith and Fear, advertising and communications consultancy. Also, the entrepreneur of the year at the 2026 Woman of Stature Awards. There's a whole long, not entirely boring list of awards that she's won. I'm not going to go through all of them now. Taryn, good evening and thanks so much for coming in tonight.
Thank you so much for having me, Steve.
So there are plenty of communications consultancies in Joburg. I get email from them on a sort of hourly basis. How do you make sure you stand out? And to do that, you need a slightly different operating model, but maybe a slightly different mission?
You know, we built Faith and Fear. We're 11 years old this year. And we built it at the time with the profound thought that this can't be it. This can't be the way advertising agencies have worked and operated and been created for the last millennia. It wasn't built. It wasn't supposed to be built like this. And so I wish I had this profound statement that said, oh, well, we took this gap in the market. The truth is, we decided that we were going to just do the ordinary extraordinarily well. And that is something that we have stuck by for 11 years. It's the ordinary things like phoning back, like answering your emails.
Wow.
Like sitting at a client briefing, hearing your full story, and then I am the one who is writing strategy and executing on that. I'm not handing over to a bunch of juniors where it all gets lost in translation, and the client starts again after the fourth or fifth time trying to explain what they do and what makes them different. So I think those are the basics that we have really worked hard on. I think similar to what your gentleman was talking about earlier was around the execution piece of strategy.
Yeah.
It's great to have it on a piece of paper, and we do it, and it's important. The foundations are critical. But actually doing the work and pivoting and changing and adjusting depending on the market, depending on the consumer, dependent on the behavior, that's critical in moving with the times and the businesses. We've been privileged to have clients be with us. We're 11 years old for 11 years. And they've been with us through this whole time.
Is part of it, and this might sound radical, but is part of it just doing what you said you were going to do?
It's not radical, and yet it is radical.
Yeah.
It is. It's exactly saying, we said we were going to do this. We spend a lot of our time, it's coming up to board meetings now and strategy meetings for a lot of companies last quarter. And it's a proud moment going back into a board meeting. I'll go into it now in a couple of months to say, this is what we set out to do, and this is exactly what we did. Some worked, some failed, but we said we were going to do it, and we did it. That's a very, very proud moment every year.
So a lot of people, I mean, everyone tells a person who doesn't have a job to start a company, which I think is completely unfair, and we'll talk about that in a moment. But when you are starting an agency like this, and I made the point there are plenty of them, when you say to people, we're just going to do the basics right, I mean, a lot of people start out like that and don't. So how did you get your first client? Because that is, for everybody, that's the most important thing.
It's a real entrepreneurial pivotal moment of getting your first client. I had the privilege of having been in the business for 20 years before that. So I at least had that kind of base, and my name was well known, and I had a reputation for kind of saying that I was going to do what I said I was going to do. And so I had my first client happen to be Tata Communications, in fact, overseas. And they contacted me and said, we're putting a whole program together in South Africa. We're going around the country. We're meeting with different board members. We're putting a strategy together. Can you help us execute this plan? And that was kind of day one. And they knew me from past experiences. They didn't know I had started my own business. And it was just kind of your network is critical in whatever. You know, I started working when I was 16. I worked on golf courses. I was the first female golf coordinator, and of course you can imagine the stir it caused.
I can.
With the golfers when this young lass was starting the golf team off, or and then scoring their cards at the end of the day, and they were double checking. I was double checking. Yeah,
and I'm sure it wasn't just a harumph as well. It could even have been worse than that.
Correct. And so, just meeting those connections, and they were head of PwC and different agencies themselves, Deloitte, etc. And just keeping up with that network. In the olden days, I had a black book that I wrote every single name and number, and I would write notes of his kids and where they were and what they did and who his wife was, and if I met her at the after dinner, who she was, what her name was. And so building that network has stood the test of time and kind of served me throughout all these years.
I had a phone call today from an estate agent to say happy birthday, which is something that happened, a couple of days ago. Please don't say anything about it. I find it quite frustrating. But I was just like, how do you know? And he said he keeps a diary. And I felt that was very effective. I mean, it's very simple. It's free.
Yes.
It's a little bit of effort.
Yes.
But it really works. And I found the good reporters I know have all got one thing in common. Every time they spoke to a person they'd never spoken to before, they kept the number. And that's the easiest thing in the world. And when that person is suddenly Minister of X or something of Y, it matters.
It does. It does matter. And the fact that you know them personally. I use an example. I was at Varsity. I'd finished my golfing gig at the time, and now I was running corporate golf days for these guys. Same team of people that have kind of moved over the years, and talking over probably a golf hole, watering hole, and had said, could you do us a PowerPoint presentation? And I said, I actually can. And he said, could you do it by Monday? And it was Friday, obviously. And I said, I think I can. And that also catapulted into a whole lot of other things. And so, you just don't know. And I think that network and I say it to the students that we mentor now, to say that old school black book. I think you have a black book in your phone now, right? You can write notes of who you met and where you met them and what their children's names are. But those basic principles remain valid today.
When a company or a client or a potential client comes to you, they have a communication issue. They want to run a campaign, but every company, when they come to you, I imagine, wants to do the same thing. They want to change someone's mind, right? Or put a thought in the mind. What are they usually trying to do? When you get down to the nub of it, what are they really grappling with?
Everyone wants to find the differentiator, right?
Yeah.
Every company wants to figure out what makes them specifically unique. You just asked me what makes mine. And I think what it comes down to is the human behavior piece.
Yeah.
Well, what do consumers want? It's got nothing to do with what you want to do as a company. But you do have to figure out what your consumers want. And is there a human truth? Is there a human curiosity piece that you can make them stop, even if it's for a millisecond or 132 characters, that you can get them to stop and think, that's a thought. And so I think that starts with every company we ever work with, is can we find the consumer piece, the human behavior piece, the human normal Tarrant truth. I say it a lot, almost in every meeting, say, I'm so sorry, can you just speak English?
Yeah.
Because it gets into the jargon and the abbreviations and the acronyms. And I think if we just go back down to English, Tarrant English, which is smushes words together, and I always say the wrong thing. But if we can just get down to that, then I think we can get down to the humanness of where we are.
So, the medium is the message. It is about the message, and it is about making sure that it gets home. Do you find that some messages or some content is just harder to get out there, harder to make stick, harder to, everyone will say go viral, but harder to make people curious about?
Definitely. I think that companies are becoming more convoluted. I think there's some industries that are really hard. The products are difficult to explain. They're excellent and are going to make a world of difference. But to explain that in simple language, like you've just described, is hard. And the volume of content that we're consuming makes it even harder. People are talking about their competitors. If you're speaking in the banking space or the financial space, we've got all of those competitors. No, you don't. You've got the competitors of everything filling your airspace and your scrolling time with all of their messages too. So it's actually just share of content, never mind share of voice.
You don't have to give examples. Are there any times, messages or companies that you don't want to work with? You don't want to be a part of that message. Some of those campaigns, they exist in our society. Some of them are ferociously successful. They're almost entrenched, actually, in our popular culture. Are there some, have you come across some where you're just like, no, I want nothing to do with that?
There are 2 examples where we've had to, not only are they controversial, but the money is really good for an agency.
Isn't it
outside.
always? Yes.
And it would make a world of difference to the size of our agency, to the number of people we employ, to the economic growth that we could do for ourselves and for others. But I think at the heart of it is who we are and what we believe in. And I think that we've had to stand our ground on those values. And I must say, even though they were hard at the time, especially when you're just beginning, it's not a decision we've regretted.
Yeah.
I think it's just, we are proudly South African. We are so passionate about this country. And so anything that is going to be untoward our fellow South Africans, I think that's just something we have to stay away from.
You try and have a different operating model. You try and empower people. You try and, I suppose, you try and move away from the kind of corporate structure. How do you do that?
So when we started this business, I told you we were going to build it really differently to how all the other advertising agencies had done it. And I kind of call it a hub and spoke model. So we grow and add on contractors and suppliers and generally other female businesses onto our business in order to grow it and scale depending on the needs of the client. So we have that. We launched 6 years ago, we launched a business called the Brave Collective, which is an empowerment arm for easy English. But what is it really? Well, it's the operating system. Women have been handed this empowerment piece that we don't know what to do with. We don't have the practical, physical examples of what that means. And so the Brave Collective is that. And it's built on 3 pillars. So it's built on network. So a whole group of women. We're over 100 contractors. We're over 4,000 women on the platform who believe in this model. Our net worth. So we talk about hard things like our money, our wealth, our worth, our financial statements, our bank statements, and then self-worth. And when we started this movement 6 years ago, we thought we were 40 women in a room. And our intention was to start this business to say, hey, ladies, we're all kind of the same, on the same level, in the same kind of networking space. We're not ever allowed to talk about money. You're not allowed to talk about what you earn. And our moms never had their own bank account. So I'm not quite sure where we're going to learn this.
Yeah.
So let's talk about it and let's start the brave conversation and realize pretty quickly that women had intrinsically and unfortunately matched their self-worth with their net worth. And so if they didn't feel like they were worthy of their value, worthy of their money, and I'm talking about women who were top of the game, they could not talk about their net worth and their wealth and their debt and what they were doing with their money. And we realized, okay, we're onto a thing here. And so whether you were a homemaker or a corporate leader, or in some cases the leader of a bank, or just an entrepreneur, we all had the same kind of human experiences when it came. I mean, the statistics that we're seeing out there, Stephen, I'm sure you've seen them. They're shocking. But, I was born in the 80s, and we are a first generation of women who have had our own bank account that didn't have to be signed by our husbands or our dads. I mean, it's shocking when you think, well, when were you able to open your first bank account? In 1994, when all women were able to open their own bank account. And so we're still learning. We're only 30 years into this journey. And so that's what the Brave Collective is about. You can hear how passionate we are about it. And so when we say empowerment, we mean it, but we also mean it with the practical arm of that.
We're talking to Taryn Hunter-Sharman tonight, the co-founder and managing director of Faith and Fear. We're talking about how she makes her money, about how it works, and some of the things that she's involved in. It's 9 minutes today.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, turning intent into execution. That's how ABSA are invested in Africa's energy future.
The Money Show. How I make my money.
7 minutes to 8 the time. We're talking to Taryn Hunter-Sharman, the co-founder and managing director of Faith and Fear, about the work that she does and how it all works. Taryn, in your business of running a communications consultancy, lots of people in lots of industries will talk about the difficulties women face specifically. Is the communications industry different? And I can hear a cynic saying, in the communications industry, I don't know if representation of women is really a problem. I think you might find that actually representation is fine. Are there other issues, though, that women face that maybe men don't face, or that men still somehow create? I mean, is it a thing still?
It's a thing still, Stephen. You know, I think that women still have the reputation of the marketing girlies.
Yeah.
Rather than taken seriously as a senior creative or a strategist.
And it's fine until you're 35.
Absolutely. You know, if you have a look at the creative indexes, so they put those out yearly, and you have a look at who is the head of agencies and who are the head of creatives, I think it's still close on 90% male. And so representation does matter, and we don't feature there yet in that space. And I think we're making our way, but it's shocking that in 2026 we're still finding our way. I think one of the payment gaps, I think we're still earning 78 cents to the 1 rand. And so it's still unequal and still not quite the same. And I think still to this day, I mean, I've been in a couple of board meetings over the years. I'm still one among many men.
Wow.
In those boardrooms, it is getting better, but it's still not even.
It's amazing how stubborn that is, even in industries where more women join than men every year. I'm guessing, I mean, it might not be in yours, but it is in others. Yes. And still, when you get to the top decision makers, it's generally men.
Yes.
And I don't know if it's childcare or if it's something else, but there's something there.
Yeah, it is systemic. I think we're making our way, and I think we're going to, I mean, the best marketers, the best CMOs in the country at the moment are female.
Yeah.
So we're definitely making our way to the top. In terms of an advertising industry, I think we still have a long way to go.
So this is going to be a slightly personal question, but you've won a spate of awards. Yeah. And I think there's a perception that, if this person's won lots of awards, they must have tons of business, must be going really well. The name recognition must be, it must be easy for them. Does it make a difference?
Gosh, if you had asked me this even 2 years ago, Stephen, I would have, one, I wouldn't have entered.
Yeah.
Two, because awards don't mean much to me personally.
Yeah.
I don't think much of them. But what it has taught me by entering them is that it's made a big difference, both in the perception with clients and potential clients, and in the rooms that we network with. They have made a difference in how people perceive us, in the name and the change, and exactly what you've said of moving the reputation of women in these spaces. And so I had to eat my words. My husband is a great PR backing. He always says, Taryn, enter this and enter that. He's phenomenal at it himself. And he was the one who taught me that there's no such bad thing as bad PR, and putting your name to an award makes a difference.
That's so interesting. So if you look at entrepreneurship in South Africa, because you actually started a business, we were talking last week to an expert who said that the average age of an entrepreneur in South Africa is mid-40s. Also in the States, by the way, because you need a certain amount of social capital, and you made that point actually very strongly. When you look at entrepreneurs, and I mean, there's this sort of unfair thing that young people must start businesses, which I think, frankly, is impossible. Are there certain lessons that you remember from your start that you would wish lots of other people to know?
I do, actually. There's one thing that South African entrepreneurs are behind, and I think you'd have a better stat than me, Stephen, but in the States, I think they say you fail 5 times before you actually succeed. South Africa doesn't have that kind of stat. to be honest, I don't think we can afford to fail 5 times, and so we just push harder. But I would say that the faster you fail, the faster you learn. I read a book recently about a father entrepreneur who asked his daughters at every dinner, what did you fail at today, in order to make that lexicon part of who they are. We don't do that. We only talk about our successes and our awards and how well we did. And so I think that would be a lesson of fail quickly and fail early so that you can learn the lesson. One of the things that South Africans really need to push at is we are okay being mediocre.
Yeah.
And so we need to do the consistently well, the ordinary, extraordinarily well. And I think that in itself places you in the top 1% of entrepreneurs in this country, in whatever market you choose. And so that's what I would say. Just do what you say. You think it's so simple, and it is.
Yeah.
But gosh, it's rare.
And people notice it, don't they?
Yeah, they really do.
Taryn, thank you. Been great to talk to you tonight. I really do appreciate it. Taryn Hunter-Sharman is the co-founder and managing director of Faith and Fear, also Entrepreneur of the Year at the 2026 Women of Stature Awards South Africa. Taryn, thanks for coming in.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, turning intent into execution. That's how Absa are invested in Africa's energy future.
Well, in the US, things turning a bit negative. Was positive earlier. The Dow Jones is now up 0.18, but the Nasdaq is down 0.56, and the S&P 500 is down 0.29. I wouldn't be surprised if everyone's looking at oil prices again tonight. It has been much lower today, and of course waiting for an interest rate announcement in the US as well. We're back tomorrow. Good evening. It's 8 o'clock. For an interest rate announcement in the US as well. We're back tomorrow. Good evening. It's 8 o'clock.